In my mind, I'm gone to Carolina.
Greetings and welcome back to the Fisher Wealth Management Financial Tip of the Week. I'm Willie Fisher, partner and financial advisor. In the light of the recent volatility in the markets, I wanted to share with you 4 key things to avoid as a long-term focused investor. Number 1, don't listen to the talking heads. This recent sell-off is happening in the middle of a 7-year bull market. However, the talking heads have taken this widely anticipated pullback and made it sound like 2008 all over again. Remember, the media's goals are not aligned with yours. Their intent is to keep viewers glued to their televisions and newspapers, waiting for the sky to fall. Out in the real world, we're taking a look at the numbers behind the sell-off and making prudent adjustments where we feel necessary. Number 2, don't panic and hit the eject button. Corrections are pullbacks and they are a normal part of market cycles. Since 1927, the S&P 500 has experienced pullbacks of 5% or more every 3.5 months on average. Research shows that panicking and exiting the market is often the worst thing you can do when markets swing. By going to the sidelines, you could not only miss the potential rebound, but all the potential growth on that money going forward. Investors are notoriously terrible at picking the market tops and bottoms. Remember, investor behavior is far more important than investment selection. Number 3, don't think like a day trader instead of an investor. Stock markets are driven by fear and greed. Right now, traders are in full-on fear mode and are selling off indiscriminately at any hint of bad news. Long-term investors are taking a look around and seeing what opportunities the pullback is offering. And finally, number 4, don't get complacent. Pullbacks offer you the chance to ask yourself if you're honestly prepared for a correction. If you have a prudent strategy and a well-diversified portfolio, then you're better prepared for a potential correction. We can't predict how long these pullbacks last, but do believe that domestic indicators are positive and that there's room for more growth moving forward. These are the 4 simple things to always keep in mind during times of volatility. If you aren't having these conversations with your current advisor or would like to have further discussion on any of these topics, we'd be happy to do that here at Fisher Wealth Management. Thanks again for listening, and stay tuned for more Fisher Wealth Management tips of the week.